Boeing stock is down around 7% today following the disturbing news that there was this Alaskan Airlines flight 1282 en route to Ontario, California from Portland. 30 minutes into the flight, depressurized. You see this door frame. It looks like it completely popped off. Passengers were fearing for their lives. I mean, this is particularly alarming because this plane was relatively new, just a few weeks old. Then to have an issue like this means the proper safety checks and proper building, the manufacturing of this plane, isn't really meeting some sort of standard, or at least it should be failing some sort of standard test. And for this to be happening on a new plane is a red alert, I think, for Boeing shareholders. And the latest developments, regarding what actually happened here with Boeing is that they have this emergency door plug. So an optional emergency door. There's another emergency door, and that this, ejected mid-flight, when they got to around 10,000 feet in the air. Amazingly, like some of the stories is that like one person's shirt completely ripped off Superman style, like a kid that was sitting like a few seats away. I mean, it's pure luck that no one was sitting in those two seats, that that they would have had an unpleasant landing, or would have gotten pulled out of the plane. Someone's phone got sucked out of the plane and survived. At least that's someone's iPhone story. So I mean, some of the stories here are just absolutely just incredible. Really fortunate that no one died from what looks like to be just a terrible manufacturing accident on Boeing's part. That here it is, you can't be selling new products that are having issues like this. So not surprising to see the FAA ordering that the Boeing 737 MAX 9 plane is now, grounded, which is more than 170 planes, around the world, being impacted for this. And what's concerning, raising the level of concern, is just earlier the same week, Boeing was urging airlines to inspect the 737 MAX airplanes for loose bolts, saying, hey, we might have some issues. Why don't you check it out yourself? And then, by the way, you go back a few months prior, there were other defects where they noticed that their largest supplier, which is Spirit Aerosystems, which supplies about 70% of their narrow body jet frame, so the core part of the frame of the plane, were improperly drilling holes in the plane. Obviously an issue. You don't want too many improperly drilled holes in a plane going thousands of feet in the air. I mean, this is just one problem after another. It makes you think that there's just no real responsibility here. Like who's stepping up to say, hey, we're responsible for this, and this is an issue. And to see that it's just one problem after another, it's alarming. It's extremely alarming. And not surprising to see Spirit Aerosystems, SPR, this counterparty, this manufacturer, also sell off, with this news, because it's a good chance that they had to deal with it. You look at Boeing, these aren't just the latest problems they had. In 2018, 2019, they had two separate MAX 8 jet crashes that did result in several people perishing, unfortunately. And that had to do with the Boeing flight control software. So you have a program, the MAX program, the 737 MAX program, clearly years of problems. And so it's not fully surprising for investors to see Boeing stock, down nearly 30% over the last 5 years. So the question is, well, where does Boeing go from here is now potentially an opportunity for investors. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. We're going to talk about Boeing stock in just a second. First of all, in full disclosure, this is not financial advice. Also, quick plug, take charge of your investment journey with unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscribers. That's, I personally let you in if you're a premium annual subscriber. You look at Boeing's results. You see a stock, I already mentioned, down 30% over the last 5 years. I actually like to see it when a stock treads water for a few years if the underlying fundamentals are improving. If you see the fundamentals improving and the stock's going nowhere, that turns me on. I want to see that. That's not what you're seeing with Boeing. Here's the quarterly revenue, and it's very clear, well, their actual revenue has been trending lower broadly. Now, look, you did have COVID that you had to deal with, and that clearly had a huge impact. You could see the quarterly sales just completely collapsed in the second quarter of 2020. So clearly huge impact, and you are starting to see a recovery. But it is important to recognize that the underlying fundamentals have not improved for Boeing over the last few years. This is a chart from AI Ticker Chat, completely free to users, this key feature in terms of looking at the fundamentals of a company. You look at the free cash flow, another example where the fundamentals have not backfilled in the way I'd want to see. You've gone from a company that was historically generating $2 to $3 billion in free cash flow per quarter. So a company that could generate, comfortably $10 billion in free cash flow a year, let's say, to significant cash burn. Okay, COVID, some of which was COVID. They were burning cash beforehand, though, so it's important to recognize that as they dealt with this disaster, the 737 MAX program. And free cash flow since then has been a little more spotty. So not a clear upwards up and to the right that I want to see. You look at the market capitalization, despite, I'd argue, very poor execution, and you're seeing a business that's $140 billion. I mean, this is just incredible. Market cap of $140 billion, previously closer to $200 billion market cap. But I wouldn't say that this is in a dirt cheap territory, especially when you look at, let's look at their underlying segments. Their underlying segments are still generating significant losses. You have a commercial airplane where they're selling the planes, like the Boeing 737 MAX. You have their defense, space, and security systems. So this is things like fighter jets, satellites, that type of sexy stuff, and global services where you're servicing the planes that you sell. So this is aftermarket parts stuff, generally higher margin, recurring revenue type of thing. But overall, 2 out of 3 segments unprofitable, which is pretty incredible. Despite that, they're still saying, hey, we still think we could do $3 to $5 billion in free cash flow this year. When you look at these different segments, it's interesting to see that their defense business is still going to be cash burn. Their commercial aircraft and global servicing business, that's going to be the key driver of their free cash flows. And it's interesting that commercial aircraft is still generating positive free cash flow, even though it's negative earnings. And I think that's probably due to some sort of working capital getting the cash up front, I would suspect. But still, $3 to $5 billion in free cash flow for this business against a market cap of, $140 billion. That's based on the sale today, where it's down 7%. So just think about it like, okay, what are you really playing for? $5 billion, let's say the high end of their range, versus $140 billion market cap. You're not talking about a dirt cheap valuation. Like, if I saw the headlines that I'm looking at here with Boeing, I also would not be surprised to see a stock where I personally expected the market cap to be a lot lower. Like, I thought when I would review this that it would be like $5 billion in free cash flow and a $10 billion market cap, or a $20 billion market cap, where you could say, oh, they could take their free cash flow and buy 20% of their stock. That is not the case. This thing is trading at, 20 times, 30 times free cash flow this year. So clearly investors are saying, hey, we think free cash flow could be a lot better. But even still, even if free cash flow doubled from $5 billion to $10 billion at $140 billion stock, it's not like you're even looking at a dirt cheap valuation. So it doesn't really jump out as making sense to me. Another red flag, I think, for investors to consider is this aspect that they have $13 billion in cash and marketable securities. They have $50 billion in debt. So I do like to see that they're generating free cash flow, but if they wanted to repay that debt, it would take them, 8-10 years to do so, maybe more. If you're thinking about net debt, I don't like to see how much debt they have. I'm looking at this and thinking none of this really makes sense to me. You see management not executing. You see real problems with the underlying business. The valuation does not seem compelling at all. $140 billion for something that is riddled with problems. I mean, it's sort of shocking to me that it's priced where it is. I mean, my personal top holding, once again, I call it out to my subscribers at Unrivaled Investing, it trades at 8-9 times earnings, has a multi-decade history of crushing the market, management, significant skin in the game. And it's just like night and day difference. You could just find things that are so much easier. You could find companies that have clean balance sheets. Like, why why would you take on this risk for Boeing when you have a dirty balance sheet, you have poor execution, you don't even have like that crazy, like at most, you're not talking about hundreds of percent upside here based on this framework, based on looking at this business. I just don't see it. When I ran it through, AI ticker chats predict, it was even more dour outlook, where it's just like, oh, a lot of downside here. So I don't like it. I'm looking at Boeing. I don't see the value here. But if you have a different opinion, you might say, well, wait a second, Daniel. It's not like anyone can go and start, an aircraft manufacturing business. And so clearly long term, there's a lot of value from that. But my view is the value comes from the execution. It comes from the free cash flow. And if you're not delivering that, it should be a discount, not a premium. And the $140 billion valuation, even after today's sell-off, it's just too much. I'd love to hear your comments below. I think there are easier bets out there, folks. So I hope this video has been helpful for you. Please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.